Retail TV is brought to you by founding sponsor Ferris Lee Investments, the largest retail investment advisory firm in the nation.
Bruce Anderson, U.S. Chief Investment Officer, Partners REIT. Partners is a publicly traded Canadian real estate investment trust. Partners owns approximately 2.7 million square feet of retail product in Canada, mostly comprised of grocery-anchored and single-tenant net lease. In this segment, Bruce Anderson talks about their plans for U.S. retail acquisitions.
We are looking for grocery-anchored centers throughout the U.S., kind of East Coast, West Coast, Boston to Miami, if you will, and Seattle, Washington, down through San Diego. Select markets in between, as well as investment-grade, single-tenant, net leased retail assets. Ideally, we would like to get involved with an owner, an operator, or a developer of retail properties, where we can come in and buy a 70–80% interest in a given portfolio or a development portfolio, and retain the owner as operator and leasing agent for the assets. Hopefully, with the equity infusion that we put in, it will allow them to go out and buy or develop future product, which we, again, can possibly participate in. This U.S. program is brand new. We don't own any assets in the U.S. That's why they hired me, to kind of be their U.S. Eyes and ears, if you will. Operating success for a retail center today, I think, is leasing, followed by leasing, followed by leasing. I mean, good, strong leasing has always been the key to success. Tenant retention is also a key. No offense against the property management professionals, but property managers can save you nickels and dimes, and leasing goes right to the bottom line. So strong, good leasing, but you also need to have somebody who's watching the door. And buying properties with good locations and sound fundamentals as well. I can tell you the big challenge for us is the cap rates, is the cost of real estate, especially on the West Coast, and in select markets on the East Coast as well. And I think a lot of that is being driven by the cheap debt that's available today. I mean, you can borrow money at 3.5%, 3.75%. It makes it a little, so cap rates, especially on some assets in California, start with a 5, which make us gag somewhat. Assets on the East Coast in the better markets, or A-quality properties in the better markets, are also trading, high 5s and low 6s. So we kind of look to find something that's a little bit more, shall we say, give us a little bit more opportunity, where we can buy, mid-high 6 cap rates, low 7s that have some growth, but stable assets. We're not looking for any deals that are value add or distressed situations. We prefer to kind of replicate the portfolio that we have in Canada. If you find good properties that are accretive to FFO and not dilutive to your earnings, and you've got a good operator who can help that portfolio grow, and again, especially coupled with good leasing, I think it's a sound investment. It's been successful for us in Canada. We've done well, the stock's done well, the yield is up. Retail investors seem to be very happy with Partners REIT in Canada, and we're hoping that that can translate into the U.S. as well.
Retail TV is brought to you by founding sponsor Ferris Lee Investments, the largest retail investment advisory firm in the nation.